And now it's time for our energy update with Dan McTeague, President for Canadians for Affordable Energy. Over to you, Dan.
Thank you for that, David. And yes, we're heading towards the final couple of weeks of February. Winter weather seems to be coming back, and with it, of course, has been much higher prices as we predicted last week. We would see gasoline prices across the country move up. There's a lot of factors that are taking place right now that are really moving energy prices to the upside. We might get 1 or 2 days where it drops, but generally the markets are starting to price in, concerns about supply not being where it should be, and of course demand being not nowhere near where I think a lot thought it would be at this time of year. It's very weak. Let's unpack some of that, David. We're looking at right now is a scenario playing across the world in which there is now recognition that global demand will rise a million and a half barrels a day, so about 2% increase, 1.5-2% increase. And the supply is simply not necessarily adequately being met. Yes, the United States is fracking. Yes, they're up to 13 million barrels, but the concern is that that's not sustainable. And if we look at other factors that continue to to dog some of the refineries, maintenance, unusual shutdowns. We saw the one that we discussed last week in the U.S. Midwest, the BP plant in Whitting, Indiana, having shut down for a period of time. Still not up and running, and as a result, crimping supply for fuel pretty much across much of the U.S. Midwest and affecting prices in Western Canada. We also have to look at the rising expectations of a stronger economy in the United States, and of course, at this time of year, start to reflect on the fact that we're about 60 million barrels lower in production and in supply than we were this time last year. Traditionally, January, February tends to be months where inventories get built up, and that was the case last year. It was the case the year before, not so much during COVID, but this year we're down, and so that's going to continue to add upward pressure to prices. And if the Canadian dollar doesn't respond to the therapy, then we're going to continue to see much higher prices going forward. I think this week, though, we're going to see a bit of a breather. Gas prices in Vancouver, let's start with there, probably remaining in the $1.73, $1.74 range all the way down to $1.69. So we could see an increase or a decrease of 3 to 4 cents a liter. For the rest of the interior of BC, continuation of the $1.60 range that many communities of Prince George, Kelowna, Kamloops, and of course a little higher for diesel. Diesel, in fact, is much higher. It's gone up about 10 cents a liter this week across much of Western Canada and even Ontario. So we're going to continue to see in Alberta no real change. Calgary and Edmonton staying in the 132, 129 range, with Saskatchewan not moving much either. 139 for Regina, 139 for Saskatoon. But again, diesel having gone up 10 cents a liter. Ditto for Winnipeg and Manitoba, 125.9 seems to be a charm. It's going to stay there for at least another week. For Ontario, $1.50 a liter, a little higher in Northern Ontario, and of course, in some places, a little lower as gas stations might want to discount some of their fuel, and as a result, move some more out of the door. So you might see some at $1.40. Places like Peterborough, places that normally don't see a lot of activity. Sarnia, of course, home to 3 of the refineries. We often see gas prices there at or below cost. But generally speaking, I think there is still room for a net increase in Ontario, about 2 cents a liter. Same for Quebec. So that means Montreal and Quebec City. We'll see prices in the vicinity of about $1.63 moving to $1.65. While Atlantic Canada, which saw a big increase based on last week's increase in all of North America, is likely to see a small decrease of about 2 cents a liter for diesel and gasoline come Thursday and Friday. So a bit of a mixed bag. Some parts of the country will be going through a holiday. Ontario, for instance, Family Day. Atlantic Canada has a very similar holidays. Whatever we see in terms of prices moving up, a lot of folks are going to say, oh, it's a long weekend. Just so people understand, gas prices and the price formulation, price discovery takes place in the United States. It doesn't take place in Canada. And to my calendar, there is no big holiday coming up in the United States, certainly not a long weekend. So if you see prices going up, it's a coincidence, and it may have a lot to do with where markets are going. We also have to keep our mind, though, and our eye focused on the Canadian dollar, because it's still holding at about 135 pennies to buy a US dollar. This time last year, it was a little stronger at 132. That's critical, because if we had a Canadian dollar that was trading on par with the US dollar, the US greenback, you'd be saving about 20, 21, or 22 cents a liter. So That's taking into account of pipeline blockages. All these things are having a lot to do with why the Canadian dollar remains stubbornly weak, despite oil being very popular. Finally, Trans Mountain Pipeline, they're starting to rev up. It looks like we could see gas prices moderate and maybe a stronger dollar as a result of the first time Canada getting oil to international markets who desperately want it.